Leopold Aschenbrenner, the 24-year-old ex-OpenAI employee described as an investing genius, and most known for his hedge fund situational awareness, but also known for his totally normal laugh, just had a pretty bad week, all thanks to Ken Griffin of Citadel pulling off an absolutely cinematic Wall Street move in which he essentially swooped in and sold situational awareness's public assets for pennies on the dollar.
Stole that shit. That's what I do. I stole that shit.
Situational Awareness is a hedge fund founded by Leo, which at its peak held over $45 billion in assets, largely semiconductor stocks such as Micron, Sandisk, and Nvidia. Leo was betting on AI infrastructure to be the real winner, as opposed to guessing which individual company would end up winning the AI race. The fund had just 8 employees and was founded only 2 years ago in 2024. It was easily the fastest growing fund in history, and as such, Leo quickly became a messiah of sorts for investors. However, how does that saying go again? Oh yeah, the higher you climb, the harder you fall. Towards the end of July, the market and semiconductor stocks in particular started to really struggle. Micron fell as much as 25%, Sandisk as much as nearly 37%, Nvidia as much as 10%. Situational awareness began to bleed, largely because Leo was using extreme leverage in his positions. On July 24th, Leo reportedly sent a letter to investors begging for additional capital, calling the sell-off a great buying opportunity. All of a sudden, like a great white shark that smelled blood in the water, Ken Griffin of Citadel appears. Realizing that the foundation of situational awareness was cracking, Griffin pulled off a little bit of market manipulation to significantly worsen the situation. On July 27th, Citadel raised a false alarm by claiming that the Fed was going to do a surprise rate hike. The policy decision by the Fed on whether or not to raise interest rates was to be revealed the following day, so Citadel's false alarm caused panic selling throughout the market. Semiconductor stocks plunged even further. It was full-on chaos at situational awareness, as all of Leo's largest holdings were extremely deep in the red. Leo tried again to raise additional money on July 28th, but it just wasn't enough. The bank's margin calls began coming in, and situational awareness was not able to cover them. As a result, Leo was forced to solicit offers from competing funds on his portfolio in order for his fund to simply stay afloat. On July 30th, Griffin and Citadel bid on and won situational awareness's public stock portfolio of over $16 billion, according to multiple sources, likely for pennies on the dollar. Like I mentioned at the beginning of the video, this was an absolutely cinematic move by Griffin. He sensed the blood in the water, created a false alarm to amplify situational awareness's losses, and then bought the portfolio at a steep discount. Given how much leverage situational awareness was using, I don't think a hedge fund name has ever been more ironic. Oh, and you want to know the cherry on top? Leo was actually getting married on August 1st, just 2 days after getting schooled by Ken Griffin and losing a significant portion of his portfolio. I can only imagine his vows were a little different compared to a normal wedding. Oh, and you want to know the extra cherry on top? The following week on August 3rd, Citadel Securities reported they were up over $3 billion since buying situational awareness's portfolio, as semiconductor stocks quickly recovered as the Fed delivered bullish news. Just imagine Leo on the way home from his wedding weekend seeing this news. You know it was taking everything in him to not crash out. Let me know what you think of this whole situation, and don't forget to subscribe to stay up to date on all things business, finance, and technology.